The Fed just finished their January meeting. In their official statement, they just admitted the state of the economy. It's not falling apart, but it's not where they want it to be. They don't consider it to be doing well. They can't even increase interest rates any longer. They can't reduce the balance sheet much more below the $4 trillion mark. What an embarrassment. You came here for the truth, so let me unveil that for you. Today we're going to look at what happened in the January Fed meeting. You're going to get the sound bites from the news, but I wanted to go a little bit deeper, show you what's happening and how we can really understand what this means. So let's begin with the markets. The Dow Jones had increased over 400 points. All the US markets seemed to be up for the day. This was widely expected to be the case simply because the Federal Reserve knows how they accommodate the markets is becoming more and more important every single day. What's very interesting about the information I'll discuss with you today is simply that although people, some individuals, have acknowledged the fact that the Federal Reserve is simply being the lender of last resort, they're backstopping the losses, they are unable to deal without it. And that is quite an embarrassment. When you think about this, the entire stock market is relying on the Federal Reserve's quantitative easing policy. Throughout 2018, they brought the amount of money that they had down. They increased interest rates a few times. And can you believe it? The effect on the market was so drastic that you had everybody from Jim Cramer all the way through the CEOs of the Fortune 500 demanding that the Federal Reserve stop what they were doing. What's interesting about this further is that many people out there keep pointing to these positive factors within the economy. Look at the unemployment rate near record lows right now. Look at the jobs numbers. Look at the manufacturing. Look how well the economy is doing. And when the Federal Reserve takes away just a small percentage of the amount of money that they printed and increases interest rates to still near a historic low, the market freaks out and everybody panics. What does that tell you about the current state of the financial system? Not just in the United States, but globally. Of course, it's not good. So let me stop ranting and let's move into some of the data. You're looking at the third paragraph. It seems like the Fed is becoming more market dependent rather than data dependent. The market has become accustomed to below fair value interest rates, and trying to raise them is creating hardship. Accommodation is the new neutral, and that right there is when we say embarrassment. It is displayed for you today. Fed holds rates stable, pledges patient approach, expects ample balance sheet. This is quite an opposite sentiment from just 1 month ago. The Fed dropped from its statement language that more rate hikes likely would be warranted, further gradual increases. The central bank instead said it would be patient as it determines what future adjustments to the target range for the federal funds rate may be appropriate. Officials also issued separate statements addressing the balance sheet, saying that they expect to operate with a, quote, ample supply of bank reserves. The central bank voted unanimously to hold its rate where it is right now. You have to think to yourself, what happened in between December and January? The market was coming down from October to November, and in December we had the Federal Reserve coming out there and saying, look, we're just gonna put the balance sheet on autopilot. We're just gonna go out there and do what we've been doing now for a little while. We'll continue that. Don't worry about it. It's just going to be in the background. And as far as interest rates, we won't do it maybe 3 times. Maybe we'll just do it 2 times. Then the market panicked even further. And so they came out and basically said, look, we're going to be patient. We're going to be accommodative if it needs it. But we are looking at certain factors, and so far, those factors have not resulted in a level that warrants more accommodation. So we'll continue our policy and we'll gauge it as it happens. But what happened just a couple weeks after that last rate hike? The market started to bottom out, and it has gone up significantly higher since that point. So what in the world is the Federal Reserve doing right now? They are going against their own word. And of course, they're suggesting that this has nothing to do with the outside pressure. There are no politics involved here. Now, I personally don't think that politics have anything to do with it, of course, simply because politics means nothing when we're talking about an institution that sits above any of these governments. The central banks exist above them and do not take orders from them, despite what people believe. But anyway, that's just interesting because it's a little soundbite that's being put out there, and anybody who's trying to tell you otherwise is actually incorrect. But here we go. This is the actual statement from the Federal Reserve's own website. I'm not going to read it all for you, but if you want to see it for yourself, this is it. Now, I'm going to show you this one as well, which you may have seen also. It just goes through the statement, and the black font is everything that remained in there from the previous statement. So that might be confusing, but the statements are almost the same every single time. This one had a few omissions, which is interesting, and the red is basically where they omitted. You can see that how they cross out the words. Basically, what we're looking at right now is a Federal Reserve that has flip-flopped entirely from just 1 month ago. But in here, you can see something very interesting. The second paragraph, first line, said this: consistent with its statutory mandate, the committee seeks to foster maximum employment and price stability. So what has changed in the last month in terms of employment rates and price stability? Everything is, for the most part, the same. Okay, the amount of employment out there and the prices that you see. Nothing has really changed in that front. So something else is going on. And of course, we had the stock market taking an absolute beating up until that point. This is completely different, 180 degrees from just 1 month ago. So we need to remember that as we see what they do from now until their next meeting in March. I don't think they're going to increase unless we see something drastic changing. The market wants the drugs. They need the injection. They need the IV drip, that QE drip right in their veins, or else it's going to plummet. At least we can admit that. I see people in the comments all the time saying, look, I know what's going to happen, but the Federal Reserve is going to be there to make sure that my 7 shares stay where they are. They will not go down to the floor. The Federal Reserve is going to be there to help me. Okay, that's basically what they say. At least they acknowledge the fact that the Federal Reserve is the one doing it. Many people out there have suggested, and you see this all across the financial media, it's ridiculous, saying that, look, the Federal Reserve's balance sheet is only, of course, in quotes, $4 trillion. That doesn't account for how much money we've seen going into these equities markets and all these new ETFs that have come out, real estate, and so on. So it can't be there. But then the Federal Reserve brings their balance sheet down by such a small percentage, and then it freaks out. So obviously, it's not the total quantity of money that they hold, but the fact that they hold any at all. Effective federal funds rate is currently sitting at 2.27. This is always changing, of course, and we see the general trend has been very consistent, and that is a complete failure every single time. Now, while we did have a record high, if I can get this to come up here, a very, very record high back in 1980, 81, as you saw interest rates going up to an extremely high level, and then they came down quite drastically over the next few years. But something is very interesting. As with this moment in time leading up to 1980, 81, we saw this happening over and over again. Increasing interest rates always leads to a recession. This gray area is the recessions that we've had. And of course, time after time, we see the same result. And look what they are doing today. Another thing that I always love to mention is this. Every single time they do so, they are unable to get to their previous high. Okay, that is essential to know. They can never get back to where they were before. And previously, it looks like about, let's say, 5.5 here in the previous cycle. The last time I think was something like 6.5. So we got 5.5 here. We got 1.65 here, and now we are at 2.27. Maybe they'll get to the top of that. Maybe they're going to get to 2.5. Who knows? Who knows where they're going to go with this, okay? But clearly, they have not been able to get anywhere near where they were in the previous cycles. The market requires extremely easy money. Why? Because it's garbage. Nobody is realizing that the value of money has declined to such a level, and they still will not admit it, and that is truly horrible to see. This is the Fed balance sheet. It's still over $4 trillion. They started bringing this down. They did slow at the slowest possible rate that they ever could. This is a snail's pace. It's a turtle. But of course, this is all they can reduce the balance sheet by. My goodness, after all of that talk, all the way through here, don't worry about it. We're going to just do this temporarily. The market doesn't need this. It's just temporary stimulus. We'll pull it all back, and then the market is going to take over from here. And then they bring it down just a small percent. It went from $4.5 trillion approximately down to, maybe they'll get it down to 4. What are they going to do? 3? It doesn't even matter. Percentage-wise basis, it's extremely small. They have failed. They tried to do something and they failed at it. And there have been many economists and many people within the Fed as well suggesting that what they were trying to do with quantitative easing actually failed. And that is something that I personally agree with. So we're looking at this right now at a time when the Federal Reserve has been completely inconsistent, and that leaves individuals wondering about the future. Don't worry about what's happening with the trade issues though. Don't worry about what's happening with the real economy. As long as the Federal Reserve is there to backstop the losses, everything is going to be okay. Fed's big balance sheet wind down may be halfway complete. Many individuals believe that this is the case. We'll see what happens here. According to their reserves, this is the way that it works. Easy money flowing through. We will find out what happens in time. I just wanted to show that to you. And then one thing, just to finish this off, okay? We need to understand how we keep seeing little posts on Twitter happening with the 50 billion, the 50 Bs as they call it. It's actually $36.2 billion. So let's get that straight. It is absolutely not $50 billion every single month. It's 36.2, and they're changing this. This is going to be reduced constantly over time. This will not take very long, it looks like, until they decide to completely just get rid of it all. What an absolute joke that they want to, on one hand, be accommodative, and on the other hand, they want to allow the market forces to happen. You have to just admit that you have become the market. Please don't spread this lie. I see it all the time in people that work in the financial industry. They're looking at earnings reports. My goodness, earnings. You have to be out of your mind to believe that that is anyway moving the market at all. The little tips that you see on CNBC and Bloomberg and all these things are simply there to distract you. Look to the Federal Reserve to find out the truth. If you found this video informative, please give me a thumbs up. This is the hard-hitting details that you don't get elsewhere. So hit that like button if you want to support this channel. If you want the financial education you were not taught in school, these 2 books have everything that you need. I talk about the Federal Reserve up and down in these 2 books. Check them out at the link in the description. If you want the audiobook, you can get that at themoneygps.com.